All right, we are back for another episode of BlockFi Live, still in the midst of COVID quarantine status. So I'm in my bedroom, and our guest today is at his new house, which we'll touch on in a second. But really, pleasure to have Bryan Estes on the show. He's the CIO and managing partner at Off the Chain Capital. Bryan, thank you so much for joining us.
Thank you, Zach. Glad to be here.
Where are you? Where are you joining us from today? You
Yeah,
just
so
moved.
we just moved from Illinois down to Orlando, Florida. So in the midst of all this, so if you hear an echo, it's because we don't have any furniture yet. So
Well, that's. I'm sure you've got decent weather, probably better weather than what we have in New York. But
yeah, it is
figuring
nice.
out how to navigate a move in the midst of quarantine probably wasn't the easiest.
Yeah, it was actually a little bit easier than what we expected. So
Nice.
yeah.
Well, thanks for coming on. Maybe to start, tell us a little bit about your professional background.
Yeah, so I started off in traditional finance. Went to University of Illinois. When I got out of school in 1990, I joined a company called A.G. Edwards and Sons, which was based in St. Louis as a retail stockbroker. Did that for a few years and then moved over to the institutional side. And then from like 93 to 2004, I focused on institutional equities. I was an institutional stockbroker basically, and had a number of large institutional clients. In 2004, I decided to leave A.G. Edwards and start my own company. And then from 2004 to 2014, I ran a company called Estes Financial, and we were basically a registered investment advisor that focused on helping large institutional investors and foundations manage their assets. So, what I really did was I was an outsourced CIO for 7 endowments and foundations in the St. Louis area. So we were managing $350 million in 2014. And that's when I decided to sell my practice and focus on being a venture capitalist in the blockchain area.
And how did you first hear about or get involved in cryptocurrency? And did that impact your decision at the time in 2014, or were those two things
Yeah.
completely separate
Yeah,
from?
so it was actually 2013 I learned about Bitcoin.
Mhm.
I saw Cameron and Tyler Winklevoss on CNBC. This was when Bitcoin was at $100 per Bitcoin. And they were just talking about it, talking about what Bitcoin is and how they think it's, the money of the future. And, what struck me was that, initially being from traditional finance, I thought it was kind of like a scam. I was like, what are these guys doing on, CNBC talking about something that they own? It's probably like a pump and dump scheme. So I just dismissed it. I watched it go from 100 and then it got up to like $400. And then Congress was actually holding hearings. This is in like 2013, 2014, whether or not it should be banned or outlawed. And Congress decided not to outlaw it or ban it. And then it shot up to like 600 on that news. And then the IRS came out in guidance in 2014 on how it should be taxed as property. And then it took off from like 800, got all the way up to 1200. And then Mt. Gox got hacked. And when Mt. Gox got hacked, it fell from over 1,000 down to around $300. And I've always been a value investor using Graham Dodd value investing, like Warren Buffett type investing. And so I decided to take a look and dive into this. I figured there might be some value opportunities there. And so the first thing I did was I read the Satoshi Nakamoto white paper, and it like hit me like, wow. It was like, because I understood, after I read that, what the future was going to be. And it's kind of a weird story, but after it clicked, for like a week, I couldn't sleep. I would lay in bed and my wife would like yell at me because she would feel a heat radiating off my body because I was so excited, because it was almost like I could see what the future of finance was going to be. And so I talked to her and she allowed me to sell my practice. And so I sold it to Wells Fargo Advisors and started making investments in the blockchain space.
Yeah, that's great. And if anyone wants to go deeper on Bryan's background, he recorded an awesome podcast with Anthony Pompliano there's some really interesting stories in there about, how you uh, navigated a secondary share market to find your way
Hmm.
into
Right.
Coinbase and some other
Yeah.
really exciting investments. But for our conversation today, I think a topic that I wanted to dive into a bit, because you have one of the better presentation decks in terms of the profile of Bitcoin as an investment asset
Mhm.
that I've ever seen, is some of those topics. So the first thing you start talking about in that presentation is, why does Bitcoin have value?
Mhm.
So maybe summarize a little bit for our audience when you started developing this investment thesis and when you're communicating it to institutional investors, how you start with the why, and what is that? Why does Bitcoin have
Yeah,
value?
and that was my first question, right? Like,
Yeah.
why, how does a piece of software have value? Because that's all Bitcoin is. It's open source internet protocol software. And for those of you who don't know what that is, it's like, HTTP, which is the internet, or SMTP, which is the protocol for email. And back in the early 90s, you couldn't own stock in email or internet, right? You couldn't like call your broker up and say, buy me a piece of the internet. So what happened is you ended up investing in companies that built on top of the internet, Google and Amazon and eBay and those types of companies. But for now, the first time in history, you're able to actually own a piece of that protocol. When you invest in Bitcoin, it's basically you're owning a piece of that protocol. And so these are networks, just like the internet is a network. And as more and more people use a network, the more valuable it becomes. And so one of the examples I use is another open source internet protocol is DNS. That's the domain name system. And domain names back in the early 90s, when the system was developed, you could buy domain names for 10 or 20 or $30, some very popular ones today. And I actually had friends who did that. And I thought they were crazy. I was like, why are you spending $50 to buy a domain name? Because I didn't understand at the time. I was like 23 years old. And they're like, oh, we buy them now. And then as more and more people use the internet, these domain names will become more valuable. And I just kind of wrote it off. I didn't believe them, but that's exactly what happened. Back in the early 90s, you had a few million people use the internet, and you could buy a domain name like coca-cola.com for 25 bucks. And then when there's billions of people using the internet, those domain names became more valuable. And so that's how I look at Bitcoin. Bitcoin, there's a finite supply that will ever be created. So there's 21 million, just like there's a finite supply of domain names. And as more and more people use Bitcoin for whatever use they're using it for, then the value will go up. And because, it's just supply and demand. And so that's how I look at Bitcoin. And that's why I think it has value, is because just the usage. We know what the supply is. So if usage goes up, then the only other variable is that price has to go up. And that's what's been happening.
Yeah, and that trend line in terms of user adoption has been pretty strong, especially if you extend it for longer periods of time. It can be volatile, just like the price. But I think there's a reference to a compounded annual growth rate in the low hundreds of percents in terms of the user adoption for Bitcoin. And then
Right.
you've got this supply constraint, and you have these events called Bitcoin halvings, which is basically a reduction in the release of new Bitcoin as we're moving towards the 21 million supply cap, which you talk about a lot in the presentation. So, and we also have one coming up. It's April now. Let's see, it's April 15th today. I think March 14th is the rough estimate. So just under a month from today, the next Bitcoin halving will occur. What is the importance of these halving events, and how is that typically played into price or other cycles for
Yeah.
Bitcoin?
So the software says that every 210,000 blocks, there'll be what's called a Bitcoin halving. And so when Bitcoin first started clearing transactions through the protocol, there was 50 Bitcoin being rewarded to the miners every 10 minutes for doing that clearing process. And then when we hit 210,000 blocks, that amount got cut in half from 50 Bitcoin every 10 minutes to 25. And then in 2016, when we hit 420,000 blocks, got cut in half again. And like I said, in about a month, we're going to hit 630,000 blocks, and then gets cut in half again from 12 and a half Bitcoin down to six and a quarter. So when that happens, you have a reduced supply of Bitcoin that's being mined every day. So right now there's about 1,800 Bitcoin being mined every day. After the halving in May, there's going to be 900 Bitcoin being mined every day. So you'll have half as much Bitcoin that's being sold on the open market to fund the clearing process. And so if you have half of the supply being issued out to be sold, and you have the same amount of buying demand coming in, then you would think that the price would go up. And there's a model that was put out by Plan B. It's called a stock to flow model, and it's one of my favorite models. And it measures the scarcity of rare assets compared to the issuance of that asset, like you can say gold, how much gold is being mined versus how much is available. And you can compare that to like Bitcoin, how much Bitcoin is being generated versus how much is available. And so that model actually shows that Bitcoin should be over $100,000 about a year after the next halving. So, in about 13, 14 months, that model shows Bitcoin should be over $100,000. And that model has a 95% correlation to the historical price of Bitcoin. So it's a very accurate model.
That's great, and we'll try to link to that model and the images of it in the show notes. So, okay, I'm an institutional investor. I understand a little bit about why Bitcoin has value. I understand that there's this halving event coming up, which based on the model, the price should increase. But I'm managing a big portfolio of assets. So, how do I think about why I should add Bitcoin as a portion of that asset allocation that I already have, and what impact could that potentially have on my portfolio?
Yeah. So the Federal Reserve Bank of St. Louis published a white paper in January 2018. And in their white paper, they said that basically Bitcoin's best use case is as a diversification tool. And the reason they said that is because Bitcoin has a very low correlation to traditional asset classes like stocks, bonds, real estate, gold. And when you add a small amount of a non-correlated asset to a diversified portfolio, it actually reduces the volatility in the portfolio. No matter how volatile that asset is, if it's a small amount and it's not correlated, then it's going to reduce the volatility. And so that's why the Federal Reserve Bank in St. Louis said that it's beneficial to a portfolio to add a small amount. And that's our thesis too, is that you shouldn't have 20% of your portfolio in Bitcoin. You shouldn't have 10%. But if you add 1 to 2% of your portfolio to Bitcoin, it actually reduces the volatility. And since Bitcoin's done so well, it actually increases the returns. And when you increase the returns without increasing the volatility, that increases what's called the Sharpe ratio on a portfolio. And so we've done the studies that show that a 2% allocation increases the Sharpe ratio on a portfolio. And if you're an institutional investor, that's what you get paid to do. You want to generate returns without generating extra risk in a portfolio. And that's that's one of the benefits of Bitcoin. It will generate the returns without generating risk.
Yeah, I mean it's a crystal clear and very compelling value proposition for anyone who's in their primary line of work thinking about asset allocation models and speaking in this language about correlation and risk management and Sharpe ratios is right down the fairway. Anything else that you want to talk about in terms of the modeling work that you've done?
Yeah. So one of the things I really found very interesting is that we did. So when I was a stockbroker, we used to get these charts from like some of the mutual fund companies, and they would show asset class performance, like by asset class, right? So we'd have large cap stocks, small cap stocks, high yield bonds, government grade bonds,
REITs.
yeah, and they would rank them like, and every year there was always, one asset class that would go to the top and another one would go down to the bottom. And so I thought it'd be interesting if we added Bitcoin to that. So we actually did the work to add Bitcoin to this performance by asset class chart. And it surprised me that 8 out of the last 11 years, Bitcoin was the best performing asset class out of all the asset classes. But the most interesting part I found was that when you add a small amount of Bitcoin, like 2% allocation to a traditional model portfolio, when Bitcoin goes up a lot, you win, the portfolio does, extremely well on the upside. But there were 2 years where Bitcoin went down 60% and another down 70%. In those really bad years, with a 2% allocation, it really didn't hurt the portfolio. Instead of earning 6.4%, you earned 5.3%. And it's like, okay, well, you missed out on 1 extra percent in the down year, but in the up year, you were up 128% versus being up 14%.
Wow.
So it more than pays for it. So there was the movie The Big Short. Did you see The Big Short?
I actually rewatched clips of it recently.
Okay,
I can't remember why. It popped up in a feed somewhere, and I spent like 20 minutes rewatching clips of The Big Short.
Yeah, so the two guys in the garage, right? Brownfield funds. That was the philosophy they used. They made investments that won big, but if they lost small, and that's what Bitcoin does. When it does well, it really provides a turbo boost to your portfolio. But when it does very poorly, it really doesn't hurt you. And so I think those are great investments to have in your portfolio, where you add a small amount. If it craps out, you're not really getting hurt. But if it does well, you're looking great.
So talk to us about off the chain capital, how it started, what y'all are focused on now in your role at the firm.
Yeah, so the fund started in 2016, mainly as family and friends. It grew to about $10 million. There was a $500,000 raised in early 2017. By the end of the year, it grew to 10 million. 80% of the assets were sold at the end of December 2017 because it's a value fund. And then it kind of just sat dormant for a year and a half with my money in it, my son's money in it. And then last summer, I came across some really good value opportunities in the blockchain space and decided to reopen the fund and make it an institutional quality investment fund. And so we started offering it to people outside of the friends and family group. And so we have 30 partners today. It's, the last 2 months have been record-setting months for, fundraising. And our goal is to find value opportunities in the blockchain space. So one of our largest holdings are Mt. Gox bankruptcy claims, where we're able to buy claims on Mt. Gox, and if Bitcoin goes to zero, we get basically all of our money back. And if Bitcoin continues to go up, then we get like this asymmetric upside, because our cost of Bitcoin is near zero. So those are the types of investments that we're looking for. These really weird esoteric investments in the blockchain space that that are hard to get a hold of, but we have certain people that we deal with that have access, and it enables our partners to gain access to these great investments. But the whole goal of the fund is to outperform Bitcoin. Because I figured, and I thought about this a lot before we reopened the fund. If we can't outperform Bitcoin, then people should just own Bitcoin. Why do you need to pay someone to outperform Bitcoin, or if you can't outperform it? So that's the whole goal of the fund, and luckily we've been able to do that since 2016 and since we reopened the fund.
That's great. You've got a compelling story, and what should be, if you continue to outperform Bitcoin, an incredibly compelling return profile given how bullish you are.
And we do it without leverage. We don't use anything like weird in the portfolio. It's long only, and we actually have relatively long holding periods. The average holding period is over 12 months for the securities in there. So.
And what's the what's the feedback that you're hearing, or frequently asked questions? Maybe you've opened up the fund to outside capital. You're telling the story, and talking to folks about why they should invest. What what are usually the first things that come to people's minds, or the top questions that you get when people are considering investing?
Yeah, so when we first opened up the fund, the goal was to go to the big institutional investors that I had relationships with.
Hmm.
So I met with them for, for over like a 4 to 6 month period, had several meetings with top CIOs of these multi-billion-dollar endowments. And they all said no. They were just like, I think it was a combination of two things. One, they were up 30% for the year, right? So there's no really incentive to do something different. And the other thing is that I think there's a big reputational risk with, if you're a CIO, it took you 20 to 30 years to work your way up to that position. You're making a good living, and you don't want to risk getting fired, right? By making an allocation to something that seems like very risky. So I understand where they were coming from. So we pivoted to talking to individual investors who are accredited, and family offices, and high net worth families. And so their main questions were like, just basically, how do we gain ownership and how do we get involved? And so that's what we do is we give them a diversified portfolio of, rather just owning Bitcoin. We have like 10 different investments in the fund. So it provides some degree of diversification,
Hmm.
but it gives them the time to go do what they do without having to worry about it. So
That's great. And I know you're also uh, generously spending some of your time just on educating folks about Bitcoin in the crypto space in general. Talk a little bit about some of the work you've done there. I know you've spent time with like the Digital Chamber of Commerce, for example, but outside of off the chain, what types of educational work are you doing for the space?
yeah. So the Chamber of Digital Commerce, Perry Ann Boring, who's the founder and CEO, they hosted their first like educational series, and so we were asked to talk about Bitcoin, and like some of the questions you asked, why does it have value, and the economics behind Bitcoin. And so we did that with them a few weeks ago, and there were I think there were like over 300 people who signed up for that, and I think there were like 250 that were actually watching it.
Hmm.
So yeah, it was that was our first foray into just the educational process, and I enjoy doing that. It's I think it's useful, especially in today's environment where the Federal Reserve is just printing money and creating money out of thin air. That people need to learn what money really is. And for thousands of years we used gold and silver as our money, but we've gone through this grand experiment since 1971 where our money isn't backed by gold anymore. It's backed by the full faith and credit of the United States government. And so you're putting your trust in the government, in your money. And, we've had this 50-year experiment going on. And I don't know, I just think that, 200 years from now, I think our ancestors will look back and say, what were these people thinking? Like, why were they trusting government for their money? When for thousands of years we used like hard assets for our money. And I think that new hard asset is Bitcoin. I think that, 200 years from now, 500 years from now, 1,000 years from now, like Bitcoin is what we base our money off of. It won't be like trust in governments.
So it sounds like it sounds like you think that the current macroeconomic scenario that we find ourselves in, with the economy shut down and different types of fiscal stimulus happening from Congress and also the Fed directly, um, is very bullish for Bitcoin. Is that accurate? And is there anything else you would add to your view about, just given what's happening today, what does that mean for Bitcoin and this asset class in general?
Yeah, well, I've questioned for a long time why don't they teach finance in high school?
Yeah.
Like I wasn't taught anything about money when I was in high school. I didn't know what a mortgage was, or what interest rates were, or how that affects bond prices. And basic finance should be taught to everybody. And I think it was what Henry Ford said, something that if people understood the financial markets, or
There'd be a
understood.
riot.
Yeah, exactly. They're right. So, so yeah, I don't know if it was done on purpose, but I think there's a lack of knowledge about how our economic system works and how money works. And as more and more people educate themselves, then it's on benefit Bitcoin. Um, I was going through the drive. I went to a Steak and Shake the other day, and on the drive-through window it said, "We don't accept any bills larger than $50." And I was thinking to myself, with all the money that's being created in our system, what will that say in 5 years? We won't accept any bills larger than $500, maybe, right? I mean, it's we're getting to this point where if the central banks could just create money out of thin air, then what is it worth? If you have an infinite, I mean, Neil Kashkari, the Federal Reserve president for the Minneapolis Fed, he was on 60 Minutes a few weeks ago, and he said that we have an infinite amount of money that could be created by the Federal Reserve. Well, if you have an infinite amount of money, then the value of it's zero. If you have a finite supply of something, then it has value. And so there's this disconnect there where if they can create an infinite amount of money, then I don't see how that's worth very much. So
Yeah, and this, the implication is that at a certain point you would expect to experience inflation. There have been, not in the U.S. in recent history, but quite a few examples of other countries experiencing periods of hyperinflation with their currency, and maybe some of that same logic that you talk to institutional investors about applies directly to individuals and retail folks with any amount of money, just in terms of hedging their exposure to the dollar or other major currencies that are the base form of money where they live.
yeah, we have this chart that compares GDP to household net worth.
Mm-hmm.
And between 1950 to the mid 90s, like 95, the GDP and the household net worth kind of went right along with each other. But then from 95 on, there's this been succession of bubbles that we've had. And what that chart tells me is that, household wealth is so much higher than our GDP today. And it's because the interest rates are so low. And what's going on, in my opinion, is that asset prices are trying to reset themselves to get so we have some transparency, and we have some real numbers behind what asset prices should be worth. And it's actually the Federal Reserve banks that are and the governments that are getting involved with that that's preventing that from happening. And because naturally you don't want asset prices to go down, and so the Federal Reserve is actually creating money and bailing out the airlines and bailing out banks and bailing out Boeing, and to not allow these asset prices to reset. And I just think the prices need to clear so that we have our economy that could grow in the future.
Get
if you
back to some level of market equilibrium that you can use as a new baseline.
Yeah, it's being manipulated. Asset prices are being manipulated. And until that manipulation stops, and we'll keep going through this, every 10 years, this event where, people said, oh, let's reset prices. And then the government steps in and prevents that from happening.
Yeah, historically, a lot of folks would advocate for using gold as a hedge in scenarios like this, and there's probably still a very valid case to be made. And I think gold recently has been performing well as a hedge in this period. But you talk a little bit about in your deck the transfer of wealth, that's the generational transfer of wealth that is slowly but surely going to start occurring as baby boomers pass along their wealth to their children. Touch on gold, talk on that, touch a bit on that
So,
transfer of wealth.
it was interesting. A couple of months ago, Schwab came out with a study that showed their top holdings, and they divided it up by age groups. So they had millennials, baby boomers, and Gen X in there. And so it was interesting to see that the fifth largest holding for millennials was the Grayscale Bitcoin Trust, which is a closed-end fund that only invests in Bitcoin. and it was the 5th largest holding for millennials.
It's like the
And,
main thing you can, if you want to buy Bitcoin in a traditional brokerage account on Robinhood or Schwab or somewhere else,
right.
like that's it, GBTC.
Well, at Robinhood, you actually buy Bitcoin directly.
That's right.
Right.
Some of
So,
the
yeah,
fintech
so,
companies like Robinhood, you can buy
right.
Bitcoin.
But through Schwab or Fidelity that don't offer Bitcoin yet,
Yep.
GBTC is one of the options. And just to be, full, transparency, I'm a shareholder in Digital Currency Group, which owns Grayscale, which puts out GBTC. And just to give everyone some background on that, GBTC traditionally sells at a premium to what the underlying Bitcoin is worth too. So you need to talk to your financial advisor and make sure you understand what that means. Because when you put money into GBTC, some of it's buying Bitcoin and some of it's going towards that premium. So just make sure that you understand what you're doing with that. But anyways, yeah. So there's $68 trillion that's owned or invested with the baby boomers, and as the baby boomers, pass away, and that wealth gets passed down to the younger generations, a certain amount of that's on going to Bitcoin and cryptocurrencies because the younger generations, that's where they're investing their money. And it's like my son, he started investing in cryptocurrency when he was 14 years old. He's 20 now, but he's been doing that for 6 years. And just like my father, he invested in double E savings bonds when he was raising his family, and his father invested in a tin can that was buried in the backyard. And then I invested in stocks, and then my son and my kids are investing in cryptocurrencies. So each generation has their favorite asset class. And so as that money gets passed down to the younger generations, you'll see some of that flowing into, Bitcoin and other cryptocurrencies, which, so when you look out over the next 20 to 30 years, you can see this path that eventually, Bitcoin and crypto will be a preferred asset class in investment portfolios.
Yeah, we've got all these trends working together. They make me personally, and also BlockFi as a company, very bullish on Bitcoin. You're
Yeah.
obviously very bullish on Bitcoin. For anyone who's watching this and just wants to learn more about off the chain or you, how could folks get in touch with you, or where could they find you?
Yeah, so on Twitter, it's Bryan Estes 32. Or you could email me at brian@offthechain.capital. And, both of those are, good platforms to, contact me.
Well, Brian, thanks so much for coming on. This was great content. We're going to post links to some of the things we touched on here in the show notes. Appreciate you taking the time. Best of luck unpacking and getting set up in your new house. And we'll talk again soon. Thanks.
Thanks, Zach.
See ya.